Dubai was never supposed to feel fragile. For years, it sold the world a promise: untouchable wealth, tax-free luxury, and a skyline so ambitious it almost dared reality to challenge it. Private jets descending through golden sunsets, billion-dollar deals signed over quiet dinners, a city that looked like it had escaped every rule that governed the rest of the world. And then, almost overnight, something shifted. Not gradually, not politely, but suddenly, like a crack forming beneath glass that looked perfectly solid just seconds ago. Because when reports began surfacing in early 2026, missiles, drones, rising tensions brushing dangerously close to UAE airspace, it didn't just trigger headlines, it triggered something far more dangerous: doubt. And in a city built almost entirely on confidence, doubt spreads faster than fire in dry air. What most people didn't notice at first is that the collapse didn't begin with explosions. It began with silence. Fewer bookings, fewer deals, fewer flights, the kind of silence that doesn't make noise but drains billions. Within just weeks, Dubai's real estate market didn't correct. It plunged, wiping out over 30% in what felt like the time it takes to glance at your phone. To understand how violent that is, you'd have to remember 2008, when even the worst financial crisis unfolded over months. Dubai compressed that panic into days. Luxury villas on Palm Jumeirah, once symbols of elite status, suddenly had something new attached to them: urgency. Owners weren't negotiating anymore. They were exiting. Fast. Because Dubai doesn't sell oil or cars or machinery, it sells belief. And belief is incredibly profitable until it breaks. But think about it. Why were investors willing to pour money into projects that didn't even exist yet? Because they trusted the future being sold to them. They trusted stability. They trusted the idea that this place was immune. But the moment security is questioned, even slightly, that entire equation collapses. Because no one chases returns in a place where they're not sure they can leave safely. And that's exactly what began happening. Investors didn't slowly withdraw. They ran. Not because of losses, but because of fear of what comes next. It's the oldest rule in finance. The moment uncertainty enters the room, protecting your money matters more than growing it. But here's where it becomes even more unsettling. Dubai isn't just buildings, it's people. And most of those people were never meant to stay. Nearly 90% of the population is made up of foreigners, professionals who came for opportunity, not permanence. Which means when things go wrong, they don't stay and rebuild, they leave. And in early 2026, that's exactly what started happening. Tens of thousands quietly exiting: engineers, doctors, finance professionals, the very people who keep a modern city functioning. And when they leave, they don't just take their belongings, they take demand. Schools begin to empty, restaurants lose customers, apartments go dark, and entire economic layers start collapsing. Not because of one dramatic event, but because of thousands of silent exits happening all at once. Walk through parts of Dubai at night now, and something feels off. Towers that once symbolized endless growth stand half-lit, by their dark windows revealing a truth no one wants to say out loud. These weren't homes, they were investments. And investments, when they stop growing, get abandoned. This is where the illusion begins to fall apart. Dubai was never designed as a traditional city. It was built as a global stopover, a place people pass through, profit from, and move on. But what happens when the world stops passing through? Flights begin disappearing. Tourism, once the lifeline, starts collapsing. Airports that once pulsed with constant movement now feel eerily still. Airlines don't gamble with uncertainty, and the moment risks rise, routes quietly disappear. No tourists means no spending. No spending means no cash flow. And no cash flow means pressure. That pressure is now hitting the core of Dubai's growth model: real estate. Around 60% of transactions were off-plan, meaning people were buying promises, not properties. That system works perfectly as long as confidence remains high. But the moment buyers hesitate, everything slows. Projects stall, developers struggle, and those futuristic skylines start looking less like ambition and more like unfinished stories. Banks feel it next. Lending tightens, credit slows, And in a system dependent on continuous cash flow, that's like cutting oxygen. Even the biggest players start to look vulnerable, and this is where the ripple effect begins to spread beyond Dubai. Because Dubai isn't isolated. Its money flows through global markets, through tech investments, real estate portfolios, financial systems. When stress hits here, it doesn't stay here. Sovereign funds may need liquidity, assets get sold, markets react, and suddenly, something that seemed distant starts showing up closer to home. At the same time, Dubai's role as a global logistics hub is being quietly tested. Jebel Ali, one of the busiest ports in the world, sits behind one of the most sensitive choke points on the planet. If shipping companies begin rerouting to avoid risk, Dubai doesn't just lose traffic, it loses purpose. Because its entire model was built on being the bridge, and a bridge no one wants to cross quickly becomes irrelevant. And then there is the debt, quiet, massive, and suddenly very real. For years, cheap money allowed Dubai to expand at a pace that felt almost supernatural. Mega projects, artificial islands, record-breaking towers, all fueled by a constant flow of credit. But in a world where interest rates remain high and refinancing becomes more expensive, that strategy begins to look dangerously fragile. Billions in obligations don't disappear just because demand slows. They wait. And when cash flow weakens, those obligations start pulling everything downward. It begins subtly, delays, restructuring, quiet negotiations. But history shows how quickly that can spiral when confidence is already shaken. At the same time, competition in the region is no longer passive. Saudi Arabia is no longer watching from the sidelines. It's actively pulling capital, talent, and attention away. Massive projects backed by sovereign wealth, combined with aggressive policies forcing companies to relocate regional headquarters, are creating a slow but steady shift. For global corporations, the question is no longer why Saudi, but why not? And for Dubai, that question is far more dangerous than any headline. Because losing relevance doesn't happen in one dramatic moment. It happens gradually as alternatives become more attractive. All of this leads to a deeper, more uncomfortable question. Was this ever sustainable? A city built on speed, spectacle, and constant expansion in a region where stability is never guaranteed. For years, the answer seemed to be yes. But 2026 is starting to suggest otherwise. Because when trust fades, even slightly, it doesn't just affect one sector. It affects everything. And rebuilding trust is infinitely harder than building skyscrapers. Dubai will likely survive. The skyline will remain. The infrastructure won't vanish. But the illusion, that may already be gone. And once people stop believing in the illusion, they start asking better questions. Questions about risk, about value, about what truly lasts. Because maybe this was never just about Dubai. Maybe it's about how fragile modern economic miracles can be when they rely too heavily on confidence and not enough on foundations that can survive uncertainty. Something has shifted, and you can feel it, even if no one is saying it out loud. The image of Dubai as an untouchable fortress of wealth has taken a hit, and once a perception like that cracks, it rarely returns to what it was. The bigger question now isn't whether Dubai will recover, it's whether the world will ever look at it the same way again. Because what we've just walked through isn't only about one city in the desert, it's about a global system that has quietly relied on confidence, speed, and the assumption that certain places are simply too important to fail. Dubai was one of those places. Not a symbol that if you built big enough, moved fast enough, and attracted enough capital, you could stay ahead of reality. But reality has a way of catching up. Quietly at first, then all at once. And now, investors, corporations, and even everyday people are being forced to rethink something deeper. Not just where to put money, but what actually makes a place safe. Is it tax advantages, skyscrapers, luxury? Or is it stability, trust, and the kind of foundations you don't notice until they're tested? Because if a city like Dubai can suddenly feel uncertain, then no system is as bulletproof as it once seemed, and that realization might be far more powerful than any market crash. The real story might just be beginning. What you think, comment your thoughts below in comments, and also subscribe to the channel so you don't miss the next one.